Hi, everyone, and welcome to The Hash, where we bring you the latest and greatest in crypto and culture. My name is Naomi Brockwell. We have Will Foxley, Jen Sanasi, David Morris. Welcome to the show. We're going to start off by talking about everyone's favorite subject. How much money have we lost today? And new CPI numbers have come out. The inflation rates are soaring, so let's dive straight into them. So the latest inflation numbers say that it's been a rise of 7.5% in the past year, which is astronomical. It is a 40-year high. This keeps getting to higher and higher levels. If we break it down by looking at all these different metrics within that, wages are rising at the fastest pace in at least 20 years. We have electricity prices surging 4.2% in January alone. It is up 10.7% for a year earlier. You've got used cars, 41%. That's a pretty big number there. And then we've got, airfare, food costs, like all kinds of things. The basic takeaway from this is your money, your cash in your bank account is losing value at an astronomical rate. And we're looking at the Bitcoin prices. It seems that people are recognizing this because it does seem to be building a little bit of momentum in a bullish direction. Obviously, different factors working at play here. When news like this comes out, we know that the Fed is going to react, probably going to raise interest rates. So the people who are day traders, you saw a big dip in Bitcoin price, but now the long-term trajectory continues to be upwards as people realize that they've got to get their money out of cash and they're looking for other assets. Let's dive into all of this, what this means for us as a global economy. I'm going to throw it to you, David, to start off with. What was your take?
So obviously it's not great. It's not what we hoped for. I personally am still optimistic that a lot of this is supply chain related. But after months and months of these reports, because it is a 12-month moving average, you do have a lot of weight where that number is not going to go down sharply for a little while for sure. And on the Bitcoin inflation hedge thing, I think there are two important things to emphasize. One is that, yes, as you pointed out, interest rates going higher in general is bad for risk assets. And crypto, for the most part, is still a risk asset. Arguably, when it comes to Bitcoin, that is even still true. So it's something for people, just the public, to keep in mind. The idea that Bitcoin is an inflation hedge is still somewhat of a theory. There are structural reasons to believe that it's true, but on an in-person, real-time basis, we still are not 100% confident that that's how it's actually going to play out. I think that this is definitely blown past transitory at this point. I think we can say that. Jen, you want to dive in?
Every time we talk about inflation, I think about the human element. And in this article, they tell the story of a woman named Courtney Lucky, who used to be able to fill her grocery cart for $100. And now I think we can all relate. $100 doesn't really get you much in the grocery store. And it's people like this that I think about when we talk about the inflation rate. If we just strip out all of the politics, it's just, how are families going to live day to day when things are so expensive? And for a long time, Naomi, David, Will, we've been talking about Bitcoin as an inflation hedge, and now Bitcoin is so closely correlated to traditional markets. So just coming back to what you were saying, David, it's such a frustrating situation, but I think the call for education is still there. If people like Courtney can be more educated on alternative ways to store her money, maybe she can get more out of that cash sitting in her bank account, and maybe crypto is an alternative. So it is frustrating, but I think that this story just really still calls for education in so many areas of finance. But Naomi, I'll kick it back up to you.
Yeah, well, it does lead us back to this fatal conceit of a centrally planned economy. The Federal Reserve determining that, yes, they have all of the knowledge that they can run the economy and determine interest rates and print as much money and there'll be no consequences. I wanted to bring up a chart here from the St. Louis Federal Reserve. So this is an N1 data, M1 money chart. You can also look at the M2 money charts, but just look at that. So you can see that tiny little bit of tapering at the top, which means that they've started to lower the rate at which they are astronomically constantly printing vast amounts of money. The fact that they're still printing huge amounts of money when we have, inflation numbers at 7.5%, where we have used cars up 40%, it is a little bit mind-boggling, and it makes me wonder whether these people are even second-guessing their position and their foresight. It's obvious when you look at this. If you quadruple the money supply in a year, yes, everyone's value is going to go down. Everyone's purchasing power is going to go a lot less far. So it's really sad to see all these bureaucrats destroying the value, as you said, Jen, of all of these people. I mean, this hurts the poorest people. It hurts the middle class as well. I mean, the rich people, they're going to be putting their money into other assets. They're going to be investing in the S&P. They're probably all accredited investors. So they have all these investment opportunities that will help safeguard their wealth. But the poorer people are actually blocked from entering any of those markets and have far less opportunities when it comes to safeguarding their wealth. So it's a really sad situation. And I'm just grateful that Bitcoin exists as an alternative money, because I don't want one that's controlled by these bureaucrats who keep inflating away our purchasing power. But I think I saw your hand go up, David. I'll throw it back to you.
Yeah, just like one totally non-crypto related comment about the inflation numbers as kind of advice for people out there, which is, if you haven't noticed, everybody's changing jobs right now. And if you're not looking around at changing jobs, you should be, because a lot of people who get hired on new jobs get it at higher salary rates. So from just a strictly personal perspective, as you're in a high inflation environment, be on the job market as much as you can, I would say. Will, did you have a little tick there?
Yeah, I wanted to go back to your first point, which was interesting to me, is the supply chain part of this, right? It's always interesting when you're looking back in the history textbooks about times of inflationary events, say like the late 70s, early 80s. And a lot of people were back then commenting about how there was issues with gasoline markets or issues with like manufacturing in the United States, and like Japan was rising in its economic power. And people blamed a lot of these issues for why inflation was becoming a hot issue in the United States economy. But if you also look at the money printing that happened a decade prior because of the Vietnam War, a lot of people also blame that. So it just gets very muddled very quickly. And I think we see the same situation right now, right? We have this huge influx of dollars that was printed to offset the COVID pandemic coming in and kicking everyone to the couch. And they were handing out money to be able to allow people to spend money to keep the cogs going. Well, there's also like that supply chain crunch that came along with it, and then there's other issues that get involved, right? So the historical look at this becomes really interesting in 5 to 10 years. What are people going to blame, and where is Bitcoin going to be placed in this? Is really what I'm looking at and curious about. Naomi, I'll throw it up to you for the last thoughts.
Yeah, just quick final thoughts, because it always bothers me when people look at the money printing and attribute it just to, we're helping people, we're giving stimulus checks, we're getting people back on their feet. When the second bailout was approved, trillions of dollars from the first money printing episode had yet to be spent. And a lot of this money is just going to corporate bailouts and lining the pockets of corporations that, it's not a fair distribution of this system. It is really heavily being weighted towards people who have political relationships. And so again, it's just a very unfair situation that is hurting the poorest in our economy. Very sad. But let's change track. And David, I'm going to throw it to you. What's going on with Binance?
Yeah, wow. Some interesting news this morning. Binance is investing $200 million in Forbes. Now, this is not new capital. I believe they're buying out existing investors, but they are getting 2 board seats. I hope everybody is vaguely familiar, but Forbes is quite a venerable institution. It's been around for not a century, but many decades. I think this might be, obviously a lot of crypto companies sponsor or back crypto media, but this might be the first major case of a crypto company actually acquiring a mainstream media corporation, or not acquiring, but they have about half of a stake. I think they control about half the capital. So it will be very interesting to see. There's a lot to talk about here. Forbes was the company that broke the Tai Chi story about Binance. And there are some other factors. But before we get to the details, who wants to have the first reaction? Is this good for crypto, for Binance to buy Forbes? Will?
I'll take it off the top if I can. It's really interesting to look at crypto media and then look at traditional media and see how the two are operating in parallel, and they're also operating on completely different standards. And something like Forbes is kind of in both camps because they do have a significant crypto arm. They've been reporting on crypto for years now, and they put a lot of time and energy into it. And like you said, David, they broke that story, which was pretty big. Like Binance is the largest exchange on earth, and they deserve some scrutiny. And so Forbes, I wouldn't say caught them, but they got some really interesting documents about their plans to make headway into the United States, even though they're obviously not super welcome in the United States based on the way that their exchange is operating and current SEC rules. So big on that front. They're moving into the crypto space more and more, and it's interesting to see where the money is going and then how that money is affecting media. There's always this, the two kind of models we see is like the benevolent dictator or the subscription model. Benevolent dictator, someone owns your corporation or owns your media firm and they allow you to operate with editorial independence, or you're beholden to a subscription model, which has a lot of headaches along with it. You have to find those subscribers, you have to manage them, you have to charge them, and it's really dependent on how the market is doing. So it's a little bit of a riskier model, but some would say it has like a little bit more editorial independence. It's a whole other conversation. But with Binance moving into Forbes, they're kind of moving to the first camp, right? And that first camp necessarily has a lot of questions around editorial independence. And my take on this is typically there's a lot of firewalls set up, and it's dishonest to attack editors who are setting up these firewalls. Obviously, you always need to track the money and watch the money. So I'm not overly concerned here, but it is definitely something to be watching. Jen, I'll throw it over to you.
I think this is really interesting from an educational perspective, right? Forbes is the media institution we go to when it comes to financial news. And I think all of us will agree on this show that crypto is the future of finance. So it makes total sense that Binance has chosen to partner with Forbes. And it makes me wonder, after all of the regulatory scrutiny that they faced across the globe last year, Will, to your point, if maybe this is their attempt to have a little bit more say in the narrative in the mainstream media. And so it will be interesting to watch. But Naomi, I'll pass it up to you.
Yeah, I was going to say the exact same thing, Jen. I think that as things are heating up with government battles, I mean, we've talked about the battle in the UK with encryption and the giant media campaign that the government is embarking upon to sway public opinion against end-to-end encryption. So basically using taxpayer money to create an ad campaign to convince people that, encryption is not in the public's best interest, where we all know that it is. And so there are all of these publicity campaigns and marketing campaigns, propaganda campaigns, exercised by governments all the time, and crypto is no different. We've seen huge amount of smear campaigns historically, and things are really heating up on the regulatory front. It's not surprising that people in the crypto space are saying, okay, well, let's get down and let's participate in this in a more substantial way. So the fact that they're getting involved with Forbes, I think, is them saying that they're going to participate in this narrative in a larger way. And, when they're talking, they're framing this as well as Web3 and blockchain technologies move forward and the crypto market comes of age. We know that media is an essential element to build widespread consumer understanding and education. That's all great, but I think you read between the lines in a sort of Straussian way. I think that they're alluding to the fact that it's been a very one-sided narrative, and everything we hear from these congressional hearings is about all the bad things that crypto does, and all the money laundering, and all of these FBI gets billions of dollars that they were able to seize. That's what the mainstream population are seeing all the time from the media. And so I really think it's interesting that Binance is now diving into this and saying, we are going to participate more in this narrative, and it's no longer going to be this one-sided thing. But David, I'll throw it to you.
Yeah, so there is another factor here that connects to the only story that matters this week. Can we get the Forbes article that I brought up? So this is by Heather Morgan, one of the infamous Bitfinex hackers. And the reason this is up, for those who don't know, she was not a writer for Forbes. She was not a staffer for Forbes. Forbes has what's called a contributor network, which is a fairly loosely monitored publication system where almost anybody can put something up there. And this is interesting in the light of the Binance acquisition, because Binance did mention that they're thinking about this in terms of Web 3.0. and more open access platforms and things like that are kind of part of that equation. But as this example shows, it does also involve some risk, which is, Forbes and other open access financial journalism platforms have had issues with people using their systems to manipulate markets. Not that that's what's going on in this case, but there have been some lawsuits about people, for example, pumping assets using supposedly neutral journalistic outlets. So there might be some way to make that better. And maybe Binance can work on that, or maybe they won't. We'll see. And I think we are going to a break. I'm not good at doing these transitions. So Naomi's
let's head to the break. So up next, we are looking at the world's largest asset manager. People are saying that they've come in to save crypto, and now we can all be relieved crypto's not going anywhere. We'll dive into the details of that coming up in a moment.
And welcome back to the Hash. So we're talking about Blackrock, which is the largest asset manager on Earth. And they are now going to allow people to trade crypto on their platform, or at least invest in it. So this goes through a platform they own called Aladdin, some sort of asset purchasing platform. And they're opening the books so people can buy and sell crypto. Notably, BlackRock has a large stake in MicroStrategy, which is basically a Bitcoin proxy stock at this point. But it's Michael Saylor's firm that does data intelligence work and also has huge amounts of Bitcoin on its balance sheet. So what we're seeing here basically is BlackRock continues to get exposure to the crypto markets. A nice little note at the bottom of this article also says that about 20 people inside the firm are dedicated towards looking at the crypto markets themselves. Lastly, I would note that the fact that they're opening this up to investors at BlackRock means that there's interest from clients to trade crypto, or at least to have exposure for their own personal investments. Pretty big deal across the board. BlackRock is bigger than a 10,000 pound elephant, like a 100,000 pound elephant in the investing world. They're huge. And the fact that they're getting into this basically means that at some point, everybody needs to get involved with this. Naomi, I want to throw this one up to you. We saw a lot of titans of finance, quote unquote, jump into the crypto ring last year. Can't remember any off the top of my head. Who was the one that was at Consensus?
Ray Dalio.
Ray Dalio, that's who it was.
Dived in, yeah.
What? Don't give me that. I was like, who is that guy? Ray Dalio is at Consensus. He jumped into it, and then a bunch of other people as well jumped into it last year. And BlackRock moving forward into this market only signals to me that more people are going to be doing this.
Yeah, well, I think the key figure to look at is how much money BlackRock manages. So you mentioned the 100 billion pound elephant in the room, whatever it is. They manage over $10 trillion in assets for institutions. Now, what happens when these institutions give up their money to be handled by BlackRock is there's sort of this silo. They have this set collection of assets that they could potentially invest in. And they've just added crypto to that silo. So they've just given $10 trillion worth of value access to the crypto market. So that is actually a really huge thing. And I think that a lot of people in institutional players may have been dissuaded from getting involved because it is difficult. You segment your money, you take it out of BlackRock, you put it in another thing. Now you have two things that you have to manage. It all gets very complicated. So the fact that they're now incorporating this into assets that they offer support for is a huge deal. But David, I'll throw it to you. I saw your hand up.
Yeah, so definitely the size is a huge note. And I want to sort of spin out a tiny little bit of a conspiracy theory here. We're all familiar with the repeated denials of applications for a Bitcoin ETF. And I think that one of the ideas that is floating around there, especially now that the futures ETF has been approved, is that Gensler is trying to use this as some kind of lever to get legislation that he wants about monitoring or something else. Now, BlackRock's involvement presumably would focus fairly heavily on Bitcoin in terms of institutional investors. And I think that as uncomfortable as I am in some ways with institutional involvement with crypto, this would be a useful counterbalance to whatever agenda is stopping the Bitcoin ETF. And because BlackRock, for that size, immensely powerful. Those of you who remember a couple of years ago, they were, whatever your feelings about this, they were behind the big corporate ESG push, which also has some stuff to do with crypto that might be interesting to play out. But they can really move the conversation in a really serious way. So perhaps more than any other institutional asset manager getting involved in crypto, BlackRock is important and can change the conversation within the halls of power in a way that could shake loose some things that have been stuck for a while. So these all fit together in a way that I think is going to be very interesting. If this plays out, this is all still basically rumors, I guess, at this point. So
I always love a good conspiracy theory. It's always nice to dig into that. Yeah, I enjoyed that. Maybe we leave it on that note, end with a good conspiracy theory, and then go on to the next conspiracy and giant issue, as David said, biggest story of this week. Jen, some more news on that.
Yeah, so Heather Morgan and Ilya Lichtenstein, the story just continues to unfold. So the husband and wife were arrested earlier this week, we all know, for allegedly attempting to launder $4.5 billion in stolen crypto from the 2016 Bitfinex hack. Reports now say that the couple were using NFTs to launder some of the stolen funds, and their OpenSea accounts have since disappeared. So if you try to access two OpenSea accounts, one under the name Dutch and one under the name Ruzzlecon, you will get a 404 error message. David, I'm going to kick this off to you right now. Now, these two have not yet been convicted, but their OpenSea accounts have been taken down. And this conversation can go in so many different directions. But I just want to get your take on that. What did you think when you read the story?
Well, I'm going to start with a deep cut here, which is that if you're in the market for NFTs, I really think that on-chain NFTs are eventually going to be the sort of default because of issues like this. NFTs that are just links to JPEGs are constantly at some kind of risk. There are workarounds, and if you have a healthy community, you can restore from backups of images and things like that. But there are immense numbers of possibilities for things that you can actually do on chain. And I think it's just a pure vision, and you're at less risk because these things can't happen. If you're relying on OpenSea to actually store the images of your NFT, you're way behind. You're going to get got. But the other thing that you bring up is that the fact that they haven't been convicted, and that one I don't know what to say about it. It's honestly strange to me. I mean, as we just saw, we got that Forbes screenshot this morning. Forbes is not pulling down the articles that she wrote under her own name, so it's hard to imagine why OpenSea feels they have to be more aggressive about pulling down their NFTs. So that's a question for me that Naomi might have an answer for.
Yeah, I mean, part of their terms of service say that you can't buy, sell, trade, participate in anything that's stolen. So if they're interpreting this as, well, this was stolen funds and they created this NFT, they're kind of interpreting this as stolen NFTs, which I think is actually a crazy way to look at it, because they've taken down everything minted by Morgan, which means that if you were someone who just said, okay, this is a fun thing, I'll buy it, it's been taken down. So you've actually lost a bunch of money by your NFT disappearing. You may not have realized, had any idea that they were involved in illicit activity. I mean, it's still alleged that they're involved with illicit activity. And so it makes sense that you would not know about that, and yet you spend a tremendous amount of money on these NFTs. So I think that's a really bad move by OpenSea, and they should maybe think about this. I wouldn't be surprised if there's more scrutiny directed towards OpenSea for moves like this, as people start to realize how unsafe the assets are on the platform. But the other side of this is a really interesting point that you brought up earlier, Jen. I can't remember, maybe it was just in private chat, but you were talking about the consequences or the repercussions of NFTs in this money laundering world. Because we've always alleged that we're like, how much of NFT purchases are just money laundering? You have these assets, a tremendous amount of money moving from person to person, and now it seems that, it's an obvious place to go to launder your money, because art is subjective and you can create something with like few pixels. Someone everyone's like, $69 million. And it's like, you can't say anything against it because it's like, well, art is subjective. I mean, it was worth $69 million for that. And there's nothing against Beeple. I think his stuff is actually phenomenal, but it is against a lot of the other stuff I see on these platforms where it's like, you really paid that much for like a blank screen with like, I don't know. It's just
art,
a very
Naomi.
It's art. It's art. And I'm not going to start making definitions about what isn't
It's
art.
not art.
I know that David will. I know what David will, but I'm not an authoritarian. I'm not going to determine for you what you should consider art. But Jen, I'll throw it back to you for.
Wait, I gotta see
Will
Jen
had
really
his hand
quick.
up first.
I gotta
Okay,
see
no,
it
I
from
was just
Jen
going
really
to
quick.
say, okay, go.
You made fun of me for saying Hermes or whatever wrong the other day, and so I got to make fun of you now because you called it Bitfinex. What
did I say?
Bitfinance or whatever? What'd you say?
No, I said Bitfinex. Bitfinex.
It's
Bitfinex.
Bitfinex.
Bitfinex. That was good.
I'm Canadian. We're just gonna go.
It's just her accent.
Bitfinex.
Karma comes back.
It really does. I wanted to say, money laundering has plagued the art world, right? For as long as art has
very good point
existed, and I just know, and I say this every time we talk about money laundering, this story is going to make it into the mouths of regulators. And we are going to hear this story retold again and again. The couple who used NFTs for money laundering, and they are bad and they need to be regulated immediately. David, I heard you agreeing with me. I don't know if you had anything to add to just money laundering and art being so closely connected.
Well, I just think it's really important to point out that, this is not a unique thing to NFTs. I'm not going to point to any specific cases, but as you said, for exactly the same reasons Naomi said, I mean, it's subjective. You can just kind of move the money around. Also, just to clarify, there is no evidence yet that that was actually what they were doing in this case. I mean, maybe there's a likelihood, but that is not. And all of these are allegations. Because we're on the topic of the Bitfinex hack, I do want to make one interesting point that I think, Naomi, you will love. 2016 was the year of the Bitfinex original hack. They hacked 70 million. Also, the same year was the hack of, I think it was the Philippine Central Bank by North Korean hackers. They stole $80 million. The Bitcoin, as we know, went to 4.6 billion. The USD that was stolen by North Korean hackers is, I'm going to guesstimate, worth about 15 to 20% less today than it was 6 years ago. So I just found that interesting. Sorry, total sidebar, unrelated to NFTs. Will, were you on the stack?
No. I think we can close it out
Just
there unless anyone has novel thoughts.
We'll close it out on the pronunciation of Bitfinex, which is definitely being learned next.
Bitfinex. Call it Bitfinex.
Bitfinex. Okay. Well, remember when I called artifact or artificates? Like, it's just, sometimes you just don't get it right. So
sometimes
you just don't get it right. That's
Hermes.
We're just getting like smart ass comments from our control room right now. We're just shaking our head at you, Teresa. On that note, we will wrap up the show for today. Thank you so much for joining us. It's always a joy to be here and to be sharing crypto news with all of you. But stick around because we do have a bunch of other stuff on CoinDesk TV for you to check out. We've also got CoinDesk.com. Make sure that you're keeping up with the latest on this crypto couple. Probably the biggest thing that we're all going to be watching. Be like, what's next? Because it's super interesting. But thank you for joining in, and we will catch you all tomorrow for First Mover at 9, and then again 12 o'clock every day, the hash. Catch you later. Bye.